Hi everyone, this is Aki with another tax video. This is a big one about filing status and which one should you choose. It seems simple enough, but you will see some situation that can get somewhat complicated. So how many filing statuses are there? There are 5 filing statuses: single, married filing jointly, married filing separately, head of household, and qualifying widower, which is the least frequently used. Now, filing statuses are determined on the last day of the year. So on December 31st, if you get married on December 31st, you can file as married for the entire year. So the same situation, is the case. The same case is for if you get divorced on December 31st, you consider divorce for the entire year. So December 31st is the date basically that's used to determine your filing status for the tax year. Now, why does it matter? Why does your filing status matters? It matters because it affects deductions. The main one, standard deduction that you can subtract from your income, total income, gross income, before you get to the taxable income. And then other credit and deductions are also affected. Many times, the amount of deduction or credit you receive is dependent on your filing status. And then if you can claim, certain credit or deductions are also dependent on the status. So for the year 2022, tax year 2022, it's going to be, you can see that for single, the standard deduction is $12,950, and the same for married filing separately. For head of household, it's $19,400, and married filing jointly and qualified widower have the same amount of $25,900 that they can subtract from their gross income before it becomes taxable. In addition, you also get additional deduction for if you are over 65 and if you're blind. So there's additional standard deduction depending on your filing status. So you can see, for example, for single, you'll be additional $1,750. If you married filing jointly, it'd be $1,400 per spouse. And all this information is taken from publication 17 and 501 IRS publications. So now you notice that, you can see the amounts change, and that's how they affect your taxes. So it is important, your filing status. Now, one way you can figure out your filing status, it might be simple enough and you have had a filing status that hasn't changed over years, and that's good. And easy enough for you, but there's situation and when you have blended families and so on, and you have dependents, and if you have people moving out of households, it can be complicated. So IRS has this interactive assistant. It's like a tool on their website, and basically you can use it to answer some questions. It takes 5 minutes and it will help you determine your filing status. So let me show you briefly how to go about it. Once you get to this tool, you just have to click begin and answer different questions. It will ask you like for which year you want to select, let's say, and then asking you again on December, on the last day of 2021, were you married, and if any of the situation apply, and so on. So you have to continue, and based on these answer to these questions, the tool will help you figure out your filing status. So the first filing status is single, and it typically is a status for taxpayers who are not married, who are divorced. So if you were married but now you're divorced, you consider single or legally separated. And if you do have dependents, it depends on some criteria whether you have to file as head of household, or you can choose if you can choose to file as head of household, or you have to file a single, because there are some conditions for filing head of household. Just because you have dependents, not necessarily you will qualify for that status. So single is basically if you're not married, divorced, or legally separated. So it's a simplest status for taxpayers. The second status is married filing jointly. When you have two married taxpayers, they could choose that status. If one of the spouses died during the year, the widowed spouse could file married filing jointly for that year. So if the spouse, passed in the middle of the year, then if there was no other reasons, if this other spouse did not remarry, then they can file, the final return can be as married filing jointly. But if that spouse remarried, then that spouse would not be able to file that status with the spouse that passed. They would file that status with the new spouse. And for the spouse that died, that return, that final tax return would have to be filed as married filing separately. So that's complicated a bit. Now, the important thing to think about it is when you're filing together, that equals joint and several liability. So taxes are legal documents that you're signing and saying everything on the tax return is true, and you sign it, you date it. And basically, you agreeing to everything that's on tax return. And if you filing together, if one spouse has any types of debts, child support, student loans, or other federal debts, you are agreeing that maybe some of that refund that you might receive has to go towards payment of that liability that one of the spouses has. So you have to realize that it's like a legal document. So let's go through one example here. Let's say you are married and your spouse died in June of the tax year, and you didn't remarry, and you didn't have any dependents. You were just a couple that were married filing jointly before the spouse passed this year. So can you file married filing jointly? Yes, you can. You can file as married filing jointly for the year with your spouse. Now, there are some situations where married filing separately might be the status you want to file as. So married filing separately is for couples who are married but want to file separately. Now, it's one of the least advantageous statuses if you have certain credits and deductions that you cannot claim if you use the status. And I'll go over some of the ones that you won't be able to claim if you're using married filing separately status. But the advantage is it does separate tax liability, which can benefit certain taxpayers. Maybe in your situation, you don't want to file with your spouse. Maybe you're estranged. Maybe one of the spouses has a business that you don't want to be part of, or other reasons that we will go over. So, you have to weigh, the financial advantages versus like other advantages, legal or other life reasons why you want to use this status. So some of the situation that kind of briefly touched upon was basically the reason why you want to file married filing separately. Like if let's say one spouse wants to file the taxes, but the other one doesn't. And you're obligated, let's say, and you want to file the taxes. So in that situation, it might be an option for you. One spouse has debts. Maybe one spouse has big debts, and if you file together, all the refund that maybe you have due coming to you will be wiped out by the debts of the other spouse. Maybe you want to just keep your financial situation separate because one spouse or both of you have two different businesses and you don't really know what's going on, or there's some trust issues or what have you. Or you don't want to, joint liability, and you might not be on good terms. You might not even live together anymore. So in those situations, married filing separately might be an option for you. Some of the rules for married filing separately, like I mentioned before, some situations, like it's good, like if you're doing the taxes yourself or if you're going to tax prepare, you can, if you have some of these situations we went over, you can ask to see comparison for married filing jointly versus married filing separately, how this will affect your bottom line. And you have to consider not only how much taxes you will owe or pay or how your refund will be affected, but also if you're paying for tax returns, like are you going to be charged now for 2 tax returns or not? So that's something you have to consider. But some of the rules for married filing separately, filing status are, some of the higher, the tax rates are higher than for married filing jointly. You can't take credit for child and dependent care expenses. So it might not matter to you if you don't have children, right? You can't claim earned income tax credit. So that might also not matter if you have higher income. But if you lower income, then that will definitely have a huge impact on you as a couple. You can't claim adoption credit, but maybe you didn't adopt a child, so that would not affect you. Can't claim education credits or student loan deduction. So if you have dependents that are, in college or in schools and you have education credit that you could claim, if you file married filing separately, you would not be able to claim them. But it might not affect you if you don't have children or you don't have any student loans yourself. You can't take standard deduction if your spouse itemizes. So if one of you decides to itemize, the other spouse also has to itemize. So you both have to either use standard deduction or itemize if you're married filing separately. Most of the other credits are reduced. And if you have Social Security benefits, up to 85% of it will be taxable if you lived with your spouse. So if you married filing separately, but you're married and you're living together and you're receiving Social Security, sometimes like 0 can be taxable, 50% of it can be taxable, or up to 85%. So in that situation, if you're living together, you're getting Social Security, and you're married filing separately, up to 85% of it will be taxable. So you can't have this, the 0% being taxable or 50%. So that's one of these situations that you have to consider. Now, some people file married filing separately status because, like I mentioned previously, one of the spouses has debts that will wipe out the refund. So in order to protect the half of the refund, let's say, or maybe most of the refund, because one spouse had a big withholding, let's say, from their wages, they decide to file married filing separately. But then what happens is what we just talked about, it all these, credits and deduction can be reduced. So another option is actually in this situation to actually file injured spouse relief. So what happens is basically you have to file Form 8379, and this form determines how much of the refund belongs to each spouse. So the spouse without the debt will receive his or her share. And so, let's say you have a refund of $5,000, and based on, the tax situation, most of the refund was based on the income of one of the spouses, not the other, but the other spouse has a lot of debt, then that refund could be taken. So if you use this Form 8379, the injured spouse allocation form, that basically we say, oh, okay, let's, pay the refund to the spouse that had that refund coming, and whatever debt can be taken from the other spouse would be taken just from the other spouse allocation. Now this only applies to refunds, not tax liability. So you cannot split how much you owe to the government if you're married filing jointly and split the debt. Oh, okay, this spouse owes $4,000 of the $5,000, the other spouse owes $1,000 of, let's say, $5,000 tax liability if you owed $5,000 to government. So it only applies to refund, and you can only use that form for refund. And here is an example of how it works. So basically, in one column you have amounts shown on joint return, and then you have them split by spouses, allocate to injured spouse, the spouse that's saying, hey, I have a refund coming, but I don't want this refund to be taken by the debt of my spouse. So you can file it with married filing jointly return. If you're amending your tax return, you can also file that with the amended 1040X, or you can actually file it after you file by itself. So that's an option for you. Now, you can amend statuses most of the time. So if you filed single and you realize that actually you can claim the dependent because you fulfill all the criteria for head of household, you can amend the return up to 3 years and file it. And the same if you file married filing separately and you decide, you know what, actually probably be better for us to file jointly, because you have to also think about it, your filing status, that it affects your state returns, and there are different rules for states, and maybe for state it makes more sense to file together. So you have to consider that as well. So you can change it from married filing separately, like if you separate your tax returns, to married filing jointly up to 3 years, and you can amend, but you cannot do the other way around. So you cannot file married filing jointly and then amend to married filing separately. So you have to think about that to file married filing separately, you only have that year to do that. You cannot amend it later. So that's important. Now, we have to think about it that most of the tax rules are really not caught up with the way the families in the states are working or living together, because there's many blended families. You have, people not necessarily married and just living together. You have family members, parents living, maybe, siblings or sister brothers and so on. So you have different families nowadays than what the rules were set up for. And really the rules have not caught up. That's why the head of household, let's say, filing status is one of the more complicated one. And the way to think about it is whenever you go to tax preparer or you're doing your taxes yourself, you have to make sure you answer all those questions. They're like the determination questions at the beginning of the preparation process, honestly and with provide correct information to make sure you are finding the correct status, because otherwise you might get a letter from IRS later on that they determine actually you can't claim certain statuses which are more advantageous to you. So the filing status that's actually the most complex and the hardest to sometimes determine is the head of household. And the head of household filing status, you can use that status if you are unmarried or consider unmarried. And I'll go over some of these definitions, what it means, and on the last day of the year. Then the other criteria you have to fulfill is you have to pay more than half the cost of keeping up a home for the year. So I will go over what that means as well. And then you also have to have, the third one is a qualifying person that lived with you more than half a year. And except if you have a parent that could be your dependent who doesn't have to live with you. The parent could live in, let's say, senior facility or their own apartment or home. So all these criteria have to be fulfilled in order for you to qualify for head of household. So what does it mean when we say considered unmarried? Unmarried, that's simple enough, but considered unmarried? Considered unmarried for head of household filing status, it means you have to file separate returns. So you're married, but you're not filing together. You yourself have to pay more than half the cost of keeping up the home. and the spouse could not live with you in the past 6 months. So that means for 12 year can't live with your spouse for the past 6 months. So on July 1st on, you could not live together. So in order for you to file as head of household, you have maintained home for a child, stepchild, a foster child, and for more than half a year. So the child, let's say if the child lived with you a bit and then lived with someone else, maybe the other spouse or grandparents or what have you, the child have to live with you more than half the year. So if the child has moved around, you have to make sure you do the calculation, and the child has to be your dependent. So there's some exceptions for spouses who divorced. Maybe your previous spouse you divorced from, and the child is your dependent, but for that year the non-custodial parent is claiming them. So in that situation, it could be an exception. But that's what basically considered unmarried means. You're married, but you're not filing together. You paid more than half the cost of keeping up your home. Your spouse didn't live with you in the past 6 months, so that's important. And you have a home that you maintain for a child or a dependent. Now, what does it mean, cost of keeping up home? So this is from publication 17, IRS publication 17 and publication 501. Those are the ones that I would recommend if you have any questions. They're actually in somewhat clear language, and they're geared towards answering the basic questions. So this is really helpful. These are helpful publications to refer to if you have more questions. But this is an example from this publication to kind of show you what happens. Let's say if you living with someone else and you want to claim head of household, what kind of calculation would you have to do to determine if you paid more than half of the cost of keeping up a home? So things that you would consider are like property taxes, mortgage interest expenses, rent if you don't own a home, utility charges, repairs and maintenance for the household, property insurance, food eaten in the home, specifically not outside, other household expenses. And you would totally, total this up and then compare to the total cost for the household, because maybe you're living with a parent and, you are also paying, and you have a child, let's say a dependent. Then you want to split it and see who paid more than half. And in this situation that we have here, the total cost was $39,480, but you paid $20,200, so that's 51%. So you consider to pay more than half. So in this example, this would fulfill that requirement. Now, it's important to note, per the IRS publication 17, you do not include expenses for clothing, education expenses, medical treatment, vacations, and life insurance or transportation. So, just refer to the publication if you're not sure what you can include in the calculation. Now, how you determine who's the qualifying person? So it's also in publication 17 where you find this definition of who's your qualifying child, as well as qualifying relative, and based on this condition, if you can claim qualifying child as your dependent. So in both situations, they have to be citizen, U.S. citizen, resident alien, or resident of Canada or Mexico. They have to be related to you by blood or adoption. Could be a stepchild, foster child, brother, sister, or any descendants of them. Must be under 19 or younger than you. So in this situation, when you, let's say, remarry and your spouse is much older than you, they might have children that are about your age. So you have to consider that. The child, the qualifying child can be under 24 if they're full-time student, or any age if they're permanently disabled. Now, they have to live with you more than half a year, as we mentioned previously, so it's kind of like reiteration of these rules. They cannot provide more than half of his or her support. And you can think about that, because we're talking about, let's say, children who are 23, maybe full-time student, but they might have a job, and if they provided more than half of their own support, you would not be able to claim them as a qualifying child. They cannot be filing a joint return because, again, they could be 22 and married, and no one else can claim the child. So for small children or younger children, no one can claim them. Now you could also use the qualifying relative option to, if your dependent is not the qualifying child. So they also have to be U.S. citizen, or resident of Canada or Mexico. It can be a qualifying child, and they have to be related to you or must live with you all year. And their gross income can be more than $4,300, and you must provide half of their support. So actually, if you go through the publication 501, there's a table that specifically goes through different examples and to figure out if the qualifying person, which is the dependent that we're talking about, can qualify you for head of household. So let's just go over quickly. If the person, is your child, son, daughter, and they're single, they are a qualifying person. If they're married and you can claim them as a dependent, they can also be a qualifying person. But they're married and you can't claim them as a dependent, that they're not qualifying you for head of household. If they're qualifying relative, who is your father and mother, and this is a specific situation, we talked about it, that they don't have to necessarily live with you, but you can still, some situation, claim them as a dependent. And you can claim them as a dependent, they're a qualifying person. But if you can't claim them as a dependent, they're not a qualifying person, which is kind of like duh, right? But okay, now this example, the next one, is more complicated. So if it's a relative other than yourself, such as grandparents, brother or sister, who meet certain tests, and she or he lived with you more than half the year, and is related to you, then could be a qualifying person. If they didn't live with you more than half a year, not a qualifying person, because it doesn't fulfill that requirement. And it's not related to you. You see, that's an important one. For head of household, they have to be related to you. Then they're not qualifying person. And you can't claim them as a dependent, then obviously it's not a qualifying person. So that was kind of like helpful in some of these more complicated situations. You can go over to determine if this person is a qualifying person. So let's just go over a couple of examples to clarify some of this. So we have a situation where you have an unmarried son who lived with you all year. He's 18 years old and he didn't provide more than half of his own support. Can you file head of household? Yes, you can. He is your qualified child because he's under 19 and under 24 if he was full-time student and didn't provide more than half of his own support. So if other criteria are met, the situation is fulfilled for head of household filing status. Now another example, similar, but now the son is 25 years old and earned over $5,000. Now you cannot file head of household in this situation because he's not your qualified child anymore. He's over 19. He's over 24 as a full-time student, so that criteria is not met. And he made more than $5,000. Now, what about if you live with your girlfriend all year long? That will not qualify you for head of household. She is not related to you. So that's a situation that comes often. People want to claim their girlfriend or boyfriend for head of household, but that won't work. Now, what about if your girlfriend's son was living with you all year? Now, he is not your qualifying child because she is claiming him, unless she's not. But in this situation, we don't know other information. If she is claiming the child, then obviously you wouldn't be able to file as head of household. So these examples are in the publication 17 or 5 of 1. Let me just check briefly. Let me see, which was it? Head of household. We went through some example. Yep, so this is in publication 17, and you see these are the examples that I kind of put together in the presentation to kind of summarize them. Now, what about if your mother, who you claim as a dependent, lived in an apartment by herself, and she was your dependent again, and she passed, let's say in September, mid-year, and the cost for the apartment was $6,000, you paid $4,000, your brother paid $2,000, and your mom had no income, so maybe she was on Social Security but no other income. So in this situation, you paid more than half of the cost of keeping up your mother's apartment, right? $6,000 was the total for the apartment, and you paid $4,000, so that's more than half. And you were able to claim her as a dependent. So in this situation, you could file as head of household on this, based on this example. Now, things to consider when you're filing head of household. It's one of the most audited filing status because, the credits and deduction we talked about that are higher for that status than, let's say, if you're filing single, and it's often being filed incorrectly. Now, paid preparers need to perform due diligence on Form 8867. And so what you might find if you go to paid tax preparer, they might ask you a lot of questions. You're like, why they're asking me all these questions? Because they have to fulfill that requirement because of this filing status being audited so often and being filed incorrectly. So they might ask some additional questions to determine that you can use this filing status. And one thing that you can consider, if you actually look at Form 886-H-HOH, so this kind of goes over the criteria to file head of household, and this is actually a document that IRS uses if if you file that head of household filing status and IRS has questions or needs to determine to make sure that it's correct filing status, because let's say you filed single, then head of household, and the child is 10 or something like that. So they might ask you to provide some documentation. So if you use this form, it goes over some of the things that you might be asked to provide to IRS. So for example, for marriage test, you might want some documents to prove that you did not live with your spouse for the past 6 months of the year. If you have qualifying person, that make sure that the child, let's say, reside at your address, you might have to have school or medical records or birth certificates and so on. Cost of keeping up a home, they might ask you to provide utility bills, rent receipts, and so on. So kind of this document helps you see what information you should have. And if you have that information and you can use the filing status, then you should file it because it's more beneficial for you. But you just want to be aware what would be asked for. Now the final filing status, which is the least frequently used filing status, is a qualifying widower. So if your spouse died during the year and you didn't remarry, you can file as marrying filing jointly for the year of death. So we talked about that at the beginning. So in that situation, a spouse passed during the mid-year, you can still file married filing jointly unless you remarried. But for the next 2 years, you could qualify for qualifying widower status, but you could not remarry during those 2 years. You have to have a child or stepchild, not a foster child, who you can claim as a dependent, and the child must live with you all year long. And finally, you have to have paid more than half the cost of keeping up a home. So some of the criteria we talked about before for head of household is similar here, but the child lived with you all year long here, and you didn't remarry, and you have to make sure you've claimed them as dependents. So here I have an example here. Let's say taxpayer's wife died in 2019. They were going to file married filing jointly that year. He didn't remarry. and he still supports his 2 children who live with him all year long. Can he file qualifying widower? Yes, he can. He can file for the year of death of his wife, 2019, as married filing jointly, and he can file qualifying widower for 2020 and 2021 if all the conditions are still met. So hopefully this helps you determine your filing status or where to find more information. And make sure, if you have still more questions, you can use the IRS Interactive Assistant or other resources online, or go to a professional in your area if you're not certain. So hopefully this helps you determine your filing status and clarify some of the conditions that you have to meet. So thanks so much for watching.